is that we cannot expect inflation to be coming down rapidly and aggressively when Japan, the UK, Germany, France, all governments are basically just increasing expenditure and not addressing their fiscal imbalances. So I think that it's going to be it will continue to be a good year for gold and for silver as reserves of value, and also because there is a shift in the monetary world in which central banks globally prefer to purchase gold than to hold sovereign debt. And I think that that is the overriding factor in markets in the next years, is the gradual loss of the position as reserve of value and as preferred asset for central banks of sovereign debt. Therefore, I think that will continue to see bond yields and long-term bond yields of sovereign issuers relatively high, if not rising. And I think that we will continue to see a shift from sovereign debt to gold and silver, maybe even cryptocurrencies, if you want to accept the level of volatility in the average portfolio.
Hey everyone, my name is Anthony Fatsis and welcome back to the WTFinance podcast. On this episode, I have the pleasure of welcoming on Daniel Lacalle. So Daniel is a PhD economist and fund manager. So Daniel, thanks so much for coming on.
Thank you very much for inviting me. It's a great pleasure to be here.
Yeah, I'm really looking forward to being a big fan of your work. So glad we could get you on the show. Where I like to start all my interviews is very broad. So what are you currently seeing in the global economy?
Well, if you look at the global economy, things look pretty decent, no? There is a decent level of growth. China is growing at 4.5%. The United States is growing at a 3.54% annualized level. There's no recession, slight growth in the euro area. So it looks like things are relatively okay, no? But at the same time, it is perfectly logical that most citizens feel that things are not going well. No? And why is that? Because the loss of net real purchasing power of most citizens is very, very evident. No? The cost of living is generally rising for all citizens, both in food, in rent, in electricity, etc., etc. And at the same time, there is a perception that the possibility of purchasing a home or making ends meet is more and more challenging each time. No, so it's perfectly logical to see an economy that is sort of rising in terms of GDP because it's bloated by government spending and there's an enormous level of monetary easing, even if central banks say that they're prudent, cautious, even restrictive, as Jerome Powell likes to say, which is completely untrue. No, and so the overriding factor is this impoverishment of the middle class that is very worrying in the long term, and this very weak productivity growth, very low level of investment in the economy. So a GDP that in terms of quality is very, very poor.
Yeah, really interesting. And that's been a trend that's sort of been going on for years. So what has been the major drivers of this, I guess, trend, as you said, to poor GDP growth, to people feeling poorer? Is it all to do with the monetary policy that we've seen since post Great Recession, or are there other things that have been driving it?
Well, think about this. Most governments have taken a conscious decision that there will not be a crisis. And central banks are in line with that policy. But obviously, when you decide that there will not be a crisis, what are you doing? Basically, just bloating GDP with government spending, massively raising taxes in order to try to control deficits that you end up not controlling. So the alleged benefit of not entering into a crisis is offset by the evidence of a slow process and slow motion crisis, and that is the weakness of the purchasing power of salaries, and that's logical. Think about this: the economy is very simple. A lot of people talk about the economy as something that is super complex, but the economy is very simple. If you incentivize high productivity, uh, productivity growth will rise. However, when you have governments that are increasing taxes on high productivity and subsidizing low productivity, that are bloating GDP with government spending, what I call empty calories, and at the same time they're constantly raising taxes to the productive sector, it is no wonder that economies, in terms of GDP, well, they don't enter into a crisis, but they don't rise either in terms of the purchasing power of salaries, because productivity growth is not rising. Therefore, wage growth, it remains below inflation, and therefore, including taxes, people are certainly becoming poorer. Ultimately, it's a very simple process. We are living, particularly since 2020, a slow process of extraction of wealth from the economy, coming from a decision in 2020 that was incredibly dangerous and obviously very damaging, which was to um, put government spending at the forefront of the economy, and to increase money supply at any cost, no matter what. No, under the idea that nothing would happen because it didn't happen in 2008. Obviously, this is the typical fallacy, no? Because you in 2008, the amount of money supply growth coming from central bank policy was actually less than a third of what it was in 2020, no? And obviously, massively increasing government spending and massively increasing money supply when everybody is uh, shut down because of COVID. Then you reopen the economy, demand comes back, and suddenly you get everybody being squeezed out by an incredible and absolutely unjustified increase in prices. No, so I think that it's basically interventionism destroying the fabric of productive society.
Yeah, I personally don't understand. There's so much. I think, yeah, we're probably the finance, the economics, the practical people. It's how, these institutions aren't performing, so why would you give them more money? That's sort of what I'm thinking. But then I guess some supporters think that no, you just throw more money at it and it'll be better.
Yeah, the idea that if something doesn't work, just throw money at it makes absolutely no sense. No. More importantly, people tend to forget that throwing money at things has a very significant cost. It's not just, okay, who cares? A lot of people, when I speak with them about the economy and we talk about debt and we talk about the failure of the next generation EU funds, or the failure of so many of these government stimulus packages, a lot of people just shrug it off and say, well, who cares? At least something was done. People don't see the other side. People don't see the other side. When people look at those elements, they don't see the asset side or the liability side at the same time. No, and what they don't see is that it comes at a very significant cost. Is that it is no wonder that you have very low interest rates and at the same time you cannot purchase a home. It is no wonder that you have enormous levels of access to credit, yet you are having more difficulties to make ends meet. It is no wonder that the government tells you that the economy is doing relatively well, and you feel that it is more and more challenging. And the more that citizens go to governments demanding them to do more, then governments will do more. Well, because obviously they don't care. They're just printing it, no? And people tend to forget that printing money is not something that central banks do. Central banks don't print any money that governments have not printed prior. No, central banks, when they increase money supply and when they increase the holdings of sovereign bonds, they're basically purchasing assets that have already been issued, i.e., they're already purchasing money that has already been created. So the basic problem is that people, instead of saying governments please do less, they're saying governments please do more, and governments are willing to oblige. They're very, very happy to say, hey, fair enough, we will do more, yeah, because you're going to pay for it.
Yeah, it's growing that empire. So, well, I guess what is the difference between, as you mentioned, I guess Europe and UK are great examples. I guess the US is sort of was going that way, but now it's sort of moving in the opposite direction, it seems. What's the difference between those, I guess, economies and China, which you could say is basically a command-led, centralized economy, but it still seems to be sort of doing better than the Western economies? And maybe I'm wrong in that assumption.
Well, the Chinese economy in headlines seems to be doing a lot better than many Western economies, until you look at it. No, a lot of people in X and in different social media put these beautiful pictures of these enormous cities with enormous with striking lights and beautiful buildings. No, you don't see, for example, how many of those are completely empty. Yeah, you don't see, for example, the enormous level of overcapacity that has been built in the Chinese economy, and the level of impoverishment of Chinese citizens on the whole. Why? Because obviously, when you travel to China, you go to Shanghai, you go to Beijing, beautiful. Huh? And even in those, you see something very striking, no? Which is that on the one hand, it's supposed to be an economy that is thriving, but you go to any of the enormous shopping malls that they have, and they're virtually empty, or they have people, but they're not purchasing anything. You see gigantic sales being offered to you the moment that you're just simply looking at an item in a shop. They immediately come to you and they say, we'll give you 30% below that price. You see loads and loads and loads of people walking around but not purchasing things. No, so all these things, overcapacity, the real estate bubble, all these things, that working capital challenges at the exporting sector, are not evident to the outside world because they're not published. If they were published the way that we see, for example, economic data and economic figures of the United States, of the UK, then a lot of people would be talking today about a gigantic recession in China. And the other thing that I think is important is that it's not because of central planning. No, the things that are going badly in China are due to central planning. Central planning has not driven the Chinese economy. What has made the Chinese economy thrive, reach a level of poverty reduction and improvement in jobs and in wealth for the people, etc., in the past decades, has been opening the economy, having a sector private sector led economy, a capitalist banking system, a completely capitalist productive system, and the complete abandonment of socialist policies. And those things that are actually not working in China, and this is interesting, are the ones that were centrally planned, the ones that were coming from a central planned decision to build things that were not needed, generating an enormous level of overcapacity because there was actually no real demand. So it's interesting. China is the evidence that, on the one hand, if you abandon socialist and communist economic policies, you can grow and you can reduce poverty and you can make people richer. And at the same time, it is the evidence that the way in which you enter into stagnation is through central planning. They probably have learned the lesson. No? Because the evidence of the bursting of the real estate bubble is not being accompanied by the Chinese government announcing a massive government stimulus package. Well, that's probably what is going to save China from entering into a Japan type of stagnation, no? And in the case of the UK, the case of Canada, the case of the European Union is fully self-inflicted. The UK should be now thriving compared to the rest of the peer economies because of its innovative entrepreneurship, because of its geographical position and its political position with the United States, because of the level of support generated by a thriving financial sector. But the UK is in stagnation because of self-inflicted policies. Net zero has been a disaster for the UK. It's been driving investment away, and at the same time, instead of taking the advantages of being independent and having the possibility of deregulating and reducing taxes, instead the UK right now is suffering because it kept all of the negatives of the European Union in terms of taxation, regulation, in terms of intervention of the government, and none of the positives that could come from being independent and looking abroad for growth opportunities. It's very similar what's going on in Canada, in the UK, in France, in Germany. Actually, it's strikingly similar. Is that we saw more or less between 2016 and 2019 a trend of governments that were willing to shoot themselves in the foot in order to implement interventionist policies that have destroyed, absolutely demolished the industrial sector, manufacturing, investment, technology, etc. No?
Yeah, it is really interesting. It does seem that there was sort of this intellectual, I guess, political, global, not agenda, but I guess thought at the time in 2016, 2017, 2018 of, as you mentioned, there are these trends of net zero and other factors where I guess, you could say the wealth or the powerful people decided to follow and thought was the right thing to do without realizing, or maybe they did realize that there was going to be these massive economic and challenging implications on their economies. Maybe they thought they could do this without that, or they thought it would benefit, but it's obviously fallen through completely.
Well, you see, what happens is the following: is that all industrial and technological revolutions have come through creative destruction, through innovation, competition, and the arrival of an alternative that is cheaper, more abundant, and that is widely available. You cannot start a house from the ceiling, and you cannot just simply say, oh, by the way, we're going to abandon nuclear, just as Germany did, without any real alternative. It was ludicrous for Germany to shut down the nuclear terminals and say, oh no, we're going to offset it with solar. But solar works 20% of the time. What are you talking about? And more importantly, it's cost 200 billion euro in subsidies on top of what is already a very, very expensive network. No, so it's this. You see, this is the problem of central planning. The problem of central planning is that a group of politicians decide that this is the way forward. They create the legislation, they create the regulation, but the regulation is basically a limiting regulation. It's not a facilitating regulation. Think about this. In China, when they talk about renewable growth, when they talk about the changes in the energy mix, etc., they're always talking about coal. They don't say, "Oh, we're going to abandon coal and we're going to abandon uh, oil and gas and see what happens." No, obviously not. It would be an absolutely atrocious disaster. No, so think about this. The problem that the UK, Germany, France, Canada are suffering comes from central planning, comes from the idea of governments that they know better and that they can generate a very strong level of economic growth without having competitive, affordable, and available resources. No, so it's been one of the strangest periods I have seen in economic history. When you look at economic history, and we learn, as we have, that the FDR New Deal in the United States prolonged the Great Depression by 7 years. The worst thing that you would do is to copy that. No, you would need to learn from that. It seems that our governments, instead of learning from the mistakes made in the with the New Deal, with so many other different packages, with the Japanese stimulus plan, with the decisions of burdening industry with higher costs, etc. They said, well, it didn't work because we did not implement it. No, so we just do more. No, so I think that is ultimately the problem, is governments picking winners and losers, and governments are exceedingly bad at picking winners, very, very bad. But they're even worse at picking losers, because it's all ideologically and bureaucratically decided. So when governments put themselves at the forefront of a radical change that affects industry, that affects agriculture, that affects farming, and instead of learning from the mistakes, they double down, as we have seen with the insane regulation that agriculture and farming suffers. As we have seen with not just the insane regulation, but the absolutely unaffordable costs that industry faces relative to its peers. No, and when those politicians find that it didn't work, they just double down. Think about what the European governments did with the CO2 emission trading scheme. They created a system that was designed to become a tax. No, it was designed to become a tax, and therefore would make it more beneficial for governments because they would generate an enormous level of tax revenue. What happened is that when they allowed the trading scheme to function, the CO2 emission price started to go down. What did governments do? Instead of understanding the market and understanding that all those things were down to the reality of supply and demand, what they did was to change the system in order to make prices go up. And therefore, the inflationist policy permeated to everything else. It's not just CO2 prices, but it is regulatory burdens, but it is all the different elements, and obviously the monetary policy that subsequently comes after the enormity of debt and deficits that the governments fall into.
Yeah, they are incentivized to grow it because then that's a challenge until they sort of get challenged by the electorate. But and it seems to be happening, but then they're pushing back on that, which is so that'll be an interesting perspective that will come along. So how do you see? Do you think can it be resolved, or do you think there has to be a shift in, I guess, the electorate and in the political framework to then resolve it for these countries?
It can be resolved, and let's look at it from a positive perspective. I feel that I'm being a little bit too negative. Let's look at it from the positive perspective. UK industry, European industry, has been able to navigate an absolutely infernal situation of regulation, taxation, and constant lack of regulatory and investor security. But those companies are actually surviving, and surviving adequately and rather well. So that's the one positive that I'm thinking, is that the politicians have not been able to completely demolish the industrial, agricultural, and farming environment in the countries that we're talking about. And in the UK, it's very evident. So the only thing that you need to do is to start erasing ridiculous regulatory burdens, ridiculous legal challenges, monster taxes that make absolutely no sense, and that, more importantly, generate no discernible revenue improvement, but generate an enormous level of negative burden on investment and on job creation. No? So there is a solution, but it needs to come from, you've just said it, not from the voter base. The voter needs to go to politicians and say, no, enough is enough. Enough is enough. No, these policies are not only not working, they're working against us. And it needs to be, it needs to come from civil society. Obviously, the politicians that implemented them are not going to eliminate them.
Yeah, I completely agree. So, what are you seeing in 2026? What is your, I'm sure you're sort of looking to 2026. You're sort of strategizing, and what are some trends? So, what are you watching, and what do you think could happen?
Yeah, I think that 2026 is going to be pretty similar to 2025, no? In terms of the big concerns of investors, inflation, trade wars, and divergence between bonds and stocks, I don't think we're going to get a big difference. I think it's going to be very, very similar. But at least I think that from a 2026 perspective, what we can understand is that we cannot expect inflation to be coming down rapidly and aggressively when Japan, the UK, Germany, France, all governments are basically just increasing expenditure and not addressing their fiscal imbalances. So I think that it's going to be it will continue to be a good year for gold and for silver as reserves of value, and also because there is a shift in the monetary world in which central banks globally prefer to purchase gold than to hold sovereign debt. And I think that that is the overriding factor in markets in the next years, is the gradual loss of the position as reserve of value and as preferred asset for central banks of sovereign debt. Therefore, I think that will continue to see bond yields and long-term bond yields of sovereign issuers relatively high, if not rising. And I think that we will continue to see a shift from sovereign debt to gold and silver, maybe even cryptocurrencies, if you want to accept the level of volatility in the average portfolio. And in the equity side, I think that we're going to have a very robust 2026 because money supply growth continues to be very elevated, because earnings growth at the big companies is going to continue to be significant. And that difference that I mentioned before, big companies doing well and surviving adequately, and being able to manage their balance sheet, their margins, and their position, regardless of all the burdens that they suffer, coincides with a weakening of the small and medium enterprise fabric. No, so I think that from markets, I think it's going to continue to be a good year for equity and for risky assets, because the level of money supply growth is so insane and is going to continue to be so aggressive that what we are actually looking as the key factor for 2026 is defending yourself against the level of destruction of the purchasing power of the currency. So those factors that clash, citizens feeling poorer but large companies doing relatively better, etc., etc., all those things are likely to generate volatility. There will be volatility. There will be almost any reason for markets to have a correction will be exacerbated by high margin debt, high money supply growth, and levels of valuation that are going to continue to be uncomfortable, because it's not about whether the market is expensive, because the market is not expensive if you look at it relative to money. And relative to money, obviously, when the global money supply is at almost, is going to surpass 120, 125 trillion in 2026, then obviously you need to protect yourself against the destruction of the purchasing power of the currency. And the way to protect yourself against not CPI, which is only a measure of inflation, but monetary inflation, which includes the loss of purchasing power in every single aspect, then you need to invest. No, so I think that it is going to be a good year for investment, and it's going to be a very, very good year, particularly because one of the factors that has created more uncertainty, which is geopolitical risk and the so-called trade war, is behind us. People by now understand that if you see a headline about tariffs or about conflicts in terms of trade between countries, that may generate some volatility on the day, but people are going to shrug it off.
Yeah, interesting. As you're saying, the debasement trade is alive and well, and when governments continue down this pathway, the only option really without default is through this monetary default of debasement, which just seems like what they're doing. Yep, great. So Daniel, thanks so much for your time today. We sort of covered so much and gone in many directions. So appreciate you coming on. My last question is, what is one message you want people to take away from our conversation?
I think that the number one message is that you need to defend yourself against the erosion of the purchasing power of currencies, that it's inevitable, that we have surpassed all the limits that governments have when it comes to issuing debt. The economic limit has been surpassed. More public debt generates lower productivity and economic growth. The fiscal limit has been exceeded. Interest expense is rising despite financial repression and central bank easing. And the inflationary limit, persistent inflation. So once you understand that, you need to defend yourself investing against what is inevitable, which is that governments will try to inflate their way out of the problems that they have created.
Yeah, great. Very important message. So, Daniel, thanks so much for coming back on. Sorry, for coming on for the first time. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
Well, I think that I always say that it's easier to find me than to avoid me. No, you just Google Daniel Lacalle, and you have my ex account in Spanish and my ex account in English. They're different. You have a YouTube channel in English and a YouTube channel in Spanish. My website. So, looking forward to the dialogue in any of the different social media platforms that I'm available. So, but if you want to start in one place, I would say go to my YouTube channel in English and start from there, and go to my website where all my articles are published.
Yeah, perfect. I'll put that all in the description below so people can find you. But thanks again.
Thank you so much. I really enjoyed it.